Hello, everybody. This is Saurabh, your host for this afternoon, and today I have with me here Antoine de Lafargue, Managing Director and CTO of Total Carbon Neutrality Ventures and the VC arm of Total Energies. And another speaker who might join us a bit late, Bas Sudmeyer, Managing Director and Partner, Climate Action Lead at BCG. Um, so jumping right into it, till we wait for Bas. I will ask you, Antoine, to introduce a bit CCS, carbon capture and its sequestration, to the audience here for the people who might not know much about CCS.
Okay, good afternoon, everyone. Good morning for maybe those who are waking up. I work for Total Energies. We have new name, new logo. So we are thanks for a lot for the invitation today. And I'm happy to share thoughts about CCS, CCUS. I just want to tell you that I would talk as an investor, very close to a lot of companies, lots of startups, more than as a kind of representative of Total Energies, because I'm not really, in position to do that. But CCS is something we are talking about a lot these days. So here we're talking about sequestration of carbon dioxide, which is responsible for climate change in great parts. And so it's a big category that basically hosts two things: basically how to capture emissions at their source before they get to the atmosphere, and then how to sequester them somewhere where they will stay for good. So as historically we are an oil and gas company, our own operations are generating quite a bit of carbon dioxide, and our products, which we sell to basically the whole planet, they are often burned, and through this combustion, they also emit some CO2, and so some of our customers might be interested in sequestering and capturing these emissions. So I don't know if you want to get into technologies in more detail. I know Hello Tomorrow is pretty tech focused, but
Thank you, Antoine. We will definitely go a bit into the technologies, towards the startup side of it, towards the corporate side of it as well. But it's time for me to introduce once again, Bas Sudmeyer, Managing Director and Partner at BCG, also the Climate Action Lead at BCG. Bas, you're welcome to the webinar.
Thank you, Saurabh, and very sorry for being a few minutes late. I was talking to you, but you clearly couldn't hear me. But I think we've sorted out the technology.
Yeah, this is the challenge that we have to face in the times of COVID. Bas, Antoine just introduced CCS, and before I go ahead, let's just deep dive directly into the challenges that CCS is facing. I mean, so the technology at the moment is considered extremely expensive. Why is it so, Bas?
I think the technology itself, or at least some of the technologies that we do to capture carbon and to potentially sequester it, is actually decades old. We've been doing it for a very long time, sort of in specific processes. But for example, the technology of capturing CO2 with amine solvents is almost like 40 years old. And equally, we've been sort of injecting CO2 into the ground as part of enhanced oil recovery for a very long time. I mean, why is it considered expensive? Is because it hasn't really gone through that maturing scale. It's a technology that is only deployed in very specific areas, and therefore it's not gone through what we've seen on the renewable side, where through experience and scale curves, we've made significant gains in sort of the cost of the technology. And of course, on top of that, apart from specific geographies, we basically haven't had a carbon price to really support the technology, unlike what we've seen on the renewable side, where sort of extensive subsidization and support mechanisms from governments have really pushed down the cost of the technology.
Antoine, would you like to add to it from an investor's point of view?
Yeah, I mean, also from the engineer's point of view, when you look at the energy requirements to capture CO2, it's not a small thing. I always like to look at how much energy you need to regenerate an absorbent that you have used to capture CO2, and it's not negligible. It's like a couple of megawatt hours per ton of CO2. And I agree with Boris. This industry, the technologies have been around for a while, but they really need to scale up, and I'm sure their costs will go down. But at the end of the day, there will always be these minimum energy requirements that will be hard to overcome. I mean, those are laws of physics. So at the same time, good news is maybe the renewable energy is getting cheaper. So if we can power these systems with renewable energy, which is affordable, maybe we'll solve the whole equation. So the other thing, another thing to keep in mind is this CO2 that goes to the atmosphere. We don't see it; it's invisible. It doesn't smell. But it's quite significant in tonnage. I mean, whenever you burn a ton of fuel, you probably have a couple or 2.5 tons of CO2 going out there. So you have to imagine that every time you burn something which you have transported, like a oil tanker and so on, if you want to make a mirror image of that supply chain with CO2, you take the same amount of tons and you multiply by 2. So you have an idea of all the infrastructure you need to put in place as a mirror image of what we did for decades with oil and gas. So that also gives a scale of the challenge.
But nevertheless, the challenge is the tech itself holds a huge potential. You agree with that? Okay.
Definitely, yeah.
Okay, so we agree that there are technological challenges at CCUS at the moment. How can we make it, how do I say, affordable by bringing in new tax and policy reforms? Are there existing tax and policy reforms that are already existing to make it affordable, let's say, or there need to be changes to be made in tax and policy reforms?
Who would you like to go first, Sarab? Or does
Bas, let's start with you. Yes.
I think, as with many sort of supports for technologies, I do think it's worth distinguishing between what I would consider first of a kind and nth of a kind type of facilities. And I do think what we are seeing with governments is that sort of significant support is needed, also because some of these projects are quite high risk, to consider significant first of a kind support. And we're seeing that sort of both in grant and subsidies, both on the European side as well as sort of in specific projects in the US. So I think that's the first part to really kickstart sort of carbon capture projects in different parts in the world. I think the second step is like, what do you do with nth of a kind? And I do think there still you will need different levels of policy support. Ultimately, a carbon price is required. As Antoine says, you don't see CO2, right? It just emits, it goes into the atmosphere. And unless there is some kind of mechanism that either rewards you for capturing the CO2, right? And gives you, for example, the tax incentives like you have in the US with 45Q at sort of $50 a ton, which is probably not enough right now for all the technologies. Or in Europe, where sort of we have the ETS price as a penalty, you still need those policy supports over the long term. There needs to be a reward for capturing carbon and either sequestering it or utilizing it. But I think in the first instance, you definitely need very specific support to get the first projects off the ground that are of material scale. But I don't know if Antoine agrees or sort of further.
Yeah. I think in general, as an investor, it's good to have visibility, and that's really key. At the same time, for an emerging sector, you really need to stimulate the first projects. As for example, one we are involved in with the Norwegian government. And what is really interesting is in the long term is to anticipate where things are going, and definitely a critical piece of it is carbon price. We need a big enough carbon price. Maybe $50 is not big enough, but we could also imagine, because if the carbon price market is not very stable, this framework might have some visibility to it, but the price itself might not. So in that case, maybe some mechanism like a contract for differences that kind of ensures for an operator or a CCS project a certain price that will be paid for their carbon sequester. Maybe it could be good, like a bit like we are seeing in the renewables, where you have a certain price target that is guaranteed for renewable producers, rather than just say, hey, sell to the wholesale market, which nobody really knows exactly where it would be. So something like that for CO2 could be helpful. The 45Q is good, but maybe it gives a bit of an unfair advantage to big companies paying taxes over startups. But anyway, it's always better than nothing.
We should definitely delve a bit into comparison of RES and CCS. But because Antoine, you touched upon a point with the Norwegian government. Is it the Northern Lights project? Can you tell a little bit more about it? What are you doing there, and how does it help in lowering the cost of CCS, if that is the ultimate goal?
Yeah, I think it's a very interesting case where the whole chain from capturing CO2 at some cement plants and heavy emitting industries, then taking the CO2, transporting it with ships, and then sequestering, burying it in the ground almost 3 kilometers below the seabed, offshore. So that's a very interesting project. In a way, it proves the whole chain can work, and we are quite grateful to be part of this project with the Norwegian government, with Equinor and Shell. And the objective for the first phase is to sequester 1.5 million tons of CO2, just to give some numbers, per year. It doesn't look big compared to our overall emissions in the world of like 50 gigatons, but that's still a very good step, because it's still a $500 million capex, or euro, I don't remember exactly, but it's still a big project, and thanks to some subsidies, it's going to fly. But I think it's going to be instrumental to demonstrate an example on which the whole industry can take example. And there is also a notion of hub, because ultimately we can expand the capacity, and for that kind of infrastructure, it's good to have a backbone of an infrastructure on top of which some other emitters can plug in once it exists. So I think it makes a lot of sense for various governments to initiate similar hubs when we have the chance to have a underground reservoir which can take the CO2 on one side, and not too far away when you have heavily emitting companies where maybe the CO2 is quite concentrated. These are like germs of something bigger that can grow around. But for the initial germ, getting everything ready from the storage side to the production capture site, this probably needs some government support.
Thank you, Antoine. So first, I would just address the audience that I have here. So this webinar is conversational. So feel free to ask questions. Write your questions in the questions tab, and I will definitely ask them to Antoine and Bas here. So there are already some questions here, Antoine and Bas, and I would like to ask one question, which is rather a simple one, but it's important for us to answer. How much does it cost to sequestrate 1 ton of CO2 in the current price?
Just sequester, as in just store, or the entire end-to-end value chain? I'm assuming the question is on the whole thing.
Let's talk about the entire value chain. We start from the beginning and we go to the value chain. So
Antoine can probably talk specifically about potentially some project, but like the sequestration and transportation of CO2 is actually not that costly, especially if you have sort of onshore reservoirs where you can inject the CO2. And we're talking only, it can be from a few dollars per ton, maybe to $10 or $15 per ton for a project. The capture side is where we see wide variations, and this is all driven by the fact that sort of the CO2 coming out of different types of processes, whether it's combustion or whether it's process emissions, has very different levels of concentration of the CO2 in sort of the flue gas that comes out of the process. And to Antoine's point about energy intensity, the amount of energy it takes to sort of get CO2 out of a very diluted flow of combustion is much more expensive because you have to go through much more cycles to actually get the CO2 out of this flue gas. And that really drives up the cost. So in some cases, that can be $100 per ton or higher if you have highly concentrated sources of CO2, which typically comes from like a process emissions, for example, ammonia production or sort of some types of hydrogen production, then you're looking probably more like $50 per ton. But it really varies. There's a wide range of sort of capture costs depending on sort of what type of emissions you're looking at. I don't know if that answers the question from the person who asked it.
I guess it does. Thank you, Michael, for the question. So we will, as I said before, we will delve a bit into the comparison with RES, renewable energy sources. So there has been a lot of investments. There has been a lot of attention generated by RES in the recent few years. Yet, when you talk to experts, they say like investing only in RES or putting all the eggs in the basket of RES won't make us reach Paris Agreement goals. And it is CCS which might help us reach there. Bas, I would like to start with you on this comment. Can you comment on this? Why is that?
Yeah, well, I'm definitely not in the camp of putting all my eggs in one basket. So I'm not advocating for a CCS world. On the other hand, I wouldn't sort of advocate for a full renewable world at the moment either, because, well, I'd be personally out of business because my job is to sort of work on carbon capture. But I would also say, like, I haven't seen a scenario from any respectable institution that's showing a path to net zero and something around a 1.5 or 2 degree pathway that doesn't include some level of carbon capture. I think it's increasingly recognized as an essential technology to get us to net zero, simply because there are processes where we need either high-grade heat, like at 1,000 degrees, or sort of we have process emissions, or we just have existing facilities that are not at the end of their life and sort of will not be stranded, where we need to sort of capture the CO2. Like we cannot right now produce high-grade heat yet at an acceptable cost with pure renewable electricity. So at least in BCG, we see a number of processes where we see CO2 capture as an essential part, at least for the next 20, 30 years. I'm not even going to look further out. I don't predict really beyond 2050, but that's where I stand. But sort of definitely invite Antoine to share his perspective as well.
Antoine, please.
Yeah, I really agree. I would think it would be a delusion to think that CCS can be the only answer to climate change and that we can happily continue to grow our emissions or before capture. I think it would be a big mistake. But then, I mean, to take an example of why renewables cannot be the only solution, when you look at hydrogen needs, which are predicted to be growing quite a lot. Hydrogen, if you do it with renewables, because hydrogen has a lot of advantages as a molecule versus electrons. So today we use a lot of gas, we use a lot of coal in our energy mix, and it's quite convenient to also not go to full electric. So hydrogen has really a lot of advantages, but then you can make it through electrolysis with renewables, or you can make it from natural gas with CCS and with pretty concentrated CO2 stream, which is good. But if you were saying let's not do any blue hydrogen, which is the kind of hydrogen made by natural gas with carbon capture, then and you still want to decarbonize all the hydrogen and increase the production, then the amount of renewables you need to add on top is really huge. And it's not clear that we'll have that capacity renewable near the centers of consumption of that hydrogen. So when you look at this, you're saying we should not be dogmatic about it. There are probably a lot of places where we could just adapt our current hydrogen production with CCS and just store that CCS at a pretty competitive price. I mean, we have two solutions. They are complementary. There are probably some places where CCS works, some places where a bit more renewables doesn't hurt, and it would be strange not to kind of play on both hands. So and then I think so that's one end. The other side, which is let's do everything with CCS. I think it's the problem with CCS is you have a time scale, which is what we see often in the oil and gas. Things are not super fast in oil and gas between exploring in an area and developing a project. It's often 10 or 15 years altogether. So that's also, as an investor, when we see that kind of time scales, we are a bit scared for startups. So renewables have probably a much faster time scale. But at the same time, CCS project can be pretty huge and offer a big backbone of CO2 capture, which a lot of companies can plug into, which can be good. When it's built, it can be a pretty efficient way to put down emissions. So I think we need both.
Thank you, Antoine. I mean, I fully agree with you. The point that there has been CCS has been talked about, and yet some people still argue its efficiency and its necessity. But then we have leaders like Musk, Bezos, and Gates investing in it. So it says that definitely CCS is something that is valuable in future, or in the near future, basically. But this brings me to my second part of this webinar. So how does the introduction of utilization in CCS and CCUS make it scalable, or does it make it scalable, the introduction of utilization in CCS? And we have a question on it too, but I will ask it after. Let's go with Antoine, you first on this one.
CCUS is even better when we can, rather than having to find a hole to put the CO2 in it, if we can find somebody that pays for it, and it's great. So for a lot of startups, if they can find a market for a product that on the other side, some people can even pay on top for them to get rid of, they can get revenue from both sides, almost. And that can help compensate for very high costs, which are often encountered in the beginning when you scale up a technology. So having said that, you have to find the right combination of somebody needing the product at the same place as somebody having that extra emissions. So it's not always easy to find the right mix and fit between both sides of the equation. And sometimes the volumes are limited as well. So I think it's very good to help startups to kickstart a profitable business early on. Whether we can find scalable cases where we can, develop a lot of volumes, it's not that clear. We still have, we invested in Solidia. It's a company making cement with CO2 rather than water as a binding agent. It's actually a real technical masterpiece they've done. But then you need to scale that up in an industry that has been pretty conservative with old style cement. So it takes time. So it's an example. There are others. We invested also in a company which actually we met at Hello Tomorrow Summit a few years ago, which is called Deep Branch. They are combining hydrogen and CO2 to make single cell protein. So you can solve the issue of CO2 and fish, pressure on fish resource in one go. So that's another example, which is very interesting for us. So if we can multiply all these examples, a bit like in France, we had this big giant gas field that was started. It was the crown jewels of France in the 60s, very big gas field. It had a lot of sulfur in it. Nobody wanted it. So we had piles of yellow gold-like sulfur sitting, doing nothing there. A bit like CO2, what we do. And then over time, a full kind of chemical industry was created around that pile of sulfur, and people found usage for sulfur. So we're starting to see a lot of people trying to make products out of CO2. That would be the best. I think we'll manage to get something like this for CO2, like the same way we did for sulfur.
I was indeed going to ask you for some examples, but I see that the engineer side and you directly jump on the examples. So this is great. I have one question which I see particularly in relevance to what you just told me about Deep Branch. What are your thoughts on best practices or policies to manage the long-term liability of geologically sequestered CO2, such as in saline aquifers? Does the approach in liability management change the gigaton scale? Who would like to approach this question? Bas, you?
Yeah, I mean, I'm happy to. And it's not that different to actually how liabilities on oil and gas fields are managed today, right? Because you drill for oil or you drill for gas, you're still responsible for the integrity of the reservoir. And for example, when we in conventional oil and gas talk about the end of life of a reservoir, you have what we call the responsibility for decommissioning, for plugging the well, for abandoning the well, and depending on the geography, then also for the monitoring of those wells over time. The additional sort of complications that you get also with CO2 injection is you inject something and you leave it behind, and therefore you're then also long-term responsible for the integrity of the reservoir. Does it leak into other areas? And sort of, I think this really sort of is something where, for very long-term liability, there is a responsibility for the state as well. Otherwise, sort of, I think some of these projects might not become investable over the long term. There is also a unique situation in the US where I think the US is one of the few places where actually the people that own the land also own the minerals and everything that sits below the land, in which the US is quite unique. And therefore, if you inject something in your land in the US, you also have the responsibility that it doesn't go into other people's lands. I would say that's a unique US problem. I think different state regulators are working through that. We are definitely seeing in the US, therefore, that in some states, people are investing or exploring CCS more than in other states because the regulation is better set up. I think in Europe, regulators also still have work to do about sort of who is responsible for the long-term liabilities of wells. And I think what we typically see is that long-term, the state does have a role to play in that, sort of as the only one who can take really long-term storage liabilities upon itself.
Thank you, Bas. Thank you. We have another related question, and I'll take this. Are these CCUS technologies metal or other materials intensive? Could this become an obstacle to a widespread implementation of some of these solutions? Antoine, would you like to take it?
Sorry, I didn't catch it.
I will repeat the question. Are the CCUS technologies metal or other materials intensive? I mean, is there a limitation to these technologies by use of certain materials or raw materials? Could this become an obstacle to a widespread implementation of some of these solutions?
Yeah, I mean, I think it really depends on the technology. It is true that when you see some crazy, ambitious, let's say, direct air capture plans, where people think that we'll have fans everywhere across the planet to suck air, and then that will have some special filters to soak up the CO2. And yeah, you could imagine that the bill of materials could be quite high. Now, the thing is, there are different ways then to absorb that CO2. You can use amines, you can use solid absorbents, and to be frank, I haven't seen any very special material that people think will be critical in these things. We are obviously very aware of what's going on batteries, and on nickel and copper and lithium. On the CCUS side, I haven't seen, but maybe Bas knows, but I'm not aware of any kind of special mineral or material that would be in short supply. Obviously, steel, anything you do will need steel. But I don't know if it would be a complete game changer for this industry. Of course, steel will need to be decarbonized. Steel production would need to be decarbonized as well. That's another issue.
I think the question particularly pertained to the use of rare earth materials in renewable energy sources, and this is why the question was there. Bas, would you like to add to it?
No, I mean, if you need to use or want to use renewable energy for your carbon capture, then you're equally dependent on the same sort of rare earth discussion. I would, and sort of, yes, rare earths are used in wind turbines. Some rare earth material is used in sort of the production of solar panels as well, if you combine that with certain storage technology. So yes, everything is dependent on that same value chain. At least our experience in BCG is like, will we see some potential shortages in the short term while sort of miners catch up with sort of demand? Yes. Do we see any major concerns over the longer term with the availability of rare earth? No. We definitely see the potential for political tension and geopolitical tension given where rare earth resources might be, yes. But we don't see a fundamental shortage. And I would agree with Antoine, particularly as it relates to carbon capture technology and the materials that you would need there. We don't see any issue. Actually, funnily enough, the good thing about most of the carbon capture technologies is that sort of the solvents get recycled, so you continue to use them for the same process. It's just the energy intensity and the energy that you use.
We have another question, and I would definitely like to take this one. I mean, what are the risks to CCUS business models to future policy changes internationally in carbon tax or carbon prices? And let's start with you, Bas, and then we move on to you, Antoine, for the same question.
I think in the near to midterm, I think one of the big things that we see when we're talking to investors, and it comes back to the point that Antoine raised, is about you want stability as investors, right? What has created sort of the investability in the renewable sector, and also the fact that sort of lending has become a lot easier and these projects have become investable, is there are contract for differences, or there is a stability and there's a floor price which is based on which you can sort of take FIDs, so take final investment decision on projects, and you can also sort of cycle down the amount of equity that you have in a project, and sort of therefore recycle your capital and sort of increase the amount of lending that you can do on a project. So I think one of the threats and also one of the barriers that is still there is like, what is the long-term carbon price? What is the long-term support mechanisms? So I think that's definitely a risk and a barrier right now in terms of investing on a larger scale in terms of carbon capture. I think in terms of specifically tensions in different parts of the globe, that definitely has to do with like carbon border adjustment taxes and sort of levels of protectionism. What we actually see is it's also an opportunity. Like when we talk to some of our Middle Eastern clients, it's also an opportunity when you see a carbon border adjustment mechanism come in place in a geography like Europe, you can also see it like, well, if I can sort of, let's say, take rid of my upstream emissions on fuel, I actually sort of can reduce the amount of tax that I would pay to import. So I think it's also about, as long as those mechanisms are fair to different sort of sources of hydrocarbons or emissions, I'm not saying that takes all the geopolitical tension away, but it can definitely sort of create market incentives outside of the geography where the carbon price applies to sort of work on their emissions as well.
Thank you, Bas. I think this was really, really detailed answer, and it was to the point. Antoine, do you want to add to it? But before you go there, I would just build another question on the discussion that we are having here. So there are two things which have come out of the discussion today. One, CCS holds a lot of potential, so does CCUS. And second, for now, the scalability is a big question. And this is why my question to you, Antoine, is if you can build upon what Bas just said and add to it, my question. What is the role of startups as such and deep techs in advancing CCUS, and to what extent do you think that they can basically navigate these current challenges as compared to corporates as such? I mean, corporates have big silos in terms of the industrial nature, in terms of their long time scales. So how do you see that happening?
Yeah. So just what one point, clearly the risk for CCUS is support mechanism in the long term, definitely. And one very basic thing that we often forget when we compare that to renewable energy is energy people want it and they pay for it. CO2, if you just put it there is not a lot of demand for CO2. I mean, except for brewers and a few exceptions. So when a startup gets there, if they want like certainty on revenue, either they do CCUS, so they take the CO2, they put it in something that has some value and some demand to it, and hopefully with a cost for that product that is not completely above any reference product without that capturing it. Like I mentioned, for deep branch, how do they compare with other sources of single cell proteins, for example, or Solidia? How do they compare with conventional cements? So for startups, probably it's maybe better to pick a CCUS case. Now there are a couple of interesting trends at the moment in startups, which is why we are also looking at CCS companies. The first is that we, even without certainty on carbon price, and we still see something interesting with Europe with carbon tax at the borders. But anyway, so far certainty is pretty limited. But what we started to see corporate purchases of carbon credits. So it's like a voluntary market of big companies buying credits or things like that. So that's really encouraging because that gives certainty for the lack of a regulated market. We have voluntary companies that voluntarily buy credits. Even if you talk to the Swiss company Climeworks that does direct air capture, they're already selling. If you want, everybody can go to their website. They're already selling carbon credit, very expensive, like I don't know, 1,000 euro per ton, something. I don't remember exactly. People still buy it. So you start to see a bit of a market for some kind of carbon credits, even if it's voluntary, which is really one thing that is changing a little bit. The second is that we see a lot of, and it's linked to that, we see a lot of commitments from a lot of companies, including Total Energies here, a lot of industrial companies that they are really firming up their carbon neutrality objectives by 2050. So then when they roll out the schedule retro planning, they really need to start now thinking about how to get rid of the CO2. And that signals to startups that if startups come up with solutions, those big corporates are ready to at least pay some R&D or pilots. Because 2050 is in 30 years. If you do the math and the planning, you need to do pilots now. So that's a good signal for startups that we start to see some in the industrial space, which is usually not super great for a venture capital investor. But that the whole thing, the whole corporate world, industrial world is getting into motion right now. We invested in a company doing green hydrogen, nothing to do with CCS, but it's called Sunfire in Germany. They're getting a lot of traction. They are in the heavy industry domain. They're seeing a lot of traction. They also have a CCUS technology, which is a co-electrolyzer that can transform CO2 into syngas. We start to see those signals. So I think it's the right time for startups, and in the industry as a whole is moving into trialing and paying for pilots. And one interesting aspect linked to this is that our major contractors of the oil and gas world, like Technip, Schlumberger, Saipem, all these guys, they are also asking themselves, what should we do in an area where people are moving to hydrogen, to renewables? how to recycle our skills in this fuel world, and they are starting to look at CCS and hydrogen as maybe a way to diversify but still use their DNA and still play in the same industry for the same clients, I guess. So what's good with them is they are maybe acquirers of companies. So for an investor, I start to see some traction on maybe some pilots. I start to see traction on voluntary carbon credit markets. And I also see potentially exits from big companies which are historically from the oil and gas space, and that could be acquirers from for all these startups. So all the ingredients are maybe getting into into place for us as an investor to take a look. So the overall environment is interesting. We need still the policy support to give clarity on the price, but things are looking a lot more interesting now than they were like 2-3 years ago. Now the challenges are still that you're talking about high capex in general, especially for a lot of these projects. You need big facilities. So for a startup, it's not easy. But at the same time, we see some institutions like European Investment Bank, things like that. They are helping. They know that first-of-a-kind plants need some support. So we start to see some, institution like this. Bill Gates is launching a catalyst fund with Breakthrough Energy Ventures, Breakthrough Energy, to finance some first-of-a-kind also. So I think it's a pretty nice time at the moment for startups.
Thank you, Antoine. I mean, since we are talking about startups, I would like to get a testimony from a particular startup which has been working on reducing the footprint of concrete, carbon upcycling technologies. Paula, can you let Madison in for a brief testimony? Madison, if you're there, can you join us? If you're there, Madison, you will receive a prompt on your screen and you have to say accept, and then you can be on the stage. Okay. I guess. It's okay. We can continue that. It's all right. So this brings me to another question, because in an ecosystem where deep tech thrives, basically, you have corporates, you have startups, deep techs, and then you have academia. And this is me bringing the third pillar of this ecosystem, basically. What is the current collaborative ecosystem in terms of academia and corporates? How to foster the development of technology from academia regulation point of view in terms of CCUS? And Antoine, this question is really specific for you.
So sorry, I talked a lot already last question, but
we will definitely go back to Bas for it. But I would
Okay.
like to know, because from a corporate perspective, from an investor perspective, you have this point of view. How do you bring these technologies that are being developed in the labs in academia or in research environment to corporates or to startups?
Yeah, it's a good question. Well, at Total, we have like $500 million of R&D expenses every year, and I think 10% of that goes to CCUS. So we are right into what you're pointing at. So what we try and do is we lay the basics first. I mean, I talk about energy requirements to regenerate absorbents. That's a fundamental question we have for CCS. And a lot of that goes to finding the right absorbent materials with the right properties. We even run some quantum computers to solve those things. So we keep the academia busy with this. And then the trick is how to have drop-in technologies with something like with the overall industrial system. So I know we have some partnership with a R&D center in Norway, where the Norwegian government like paid for a huge facility to test various types of absorbents. So that's the ideal case. You have somewhere a pilot facility where you can try out different materials without changing too much the environment, the industrial environment, and you can try different things without too much extra cost. And so, courtesy of the Norwegian government, if all the countries can help, that's best. In the past, we had a pilot in the southwest of France for CCUS. Once we have those kind of things, we can play a little bit with this. We can test different compressors. We can test different solvents. So it's good to have those kind of pilot facilities, a bit like we saw in France with floating offshore wind spaces, where the government dedicates a space for different types of trials with different types of floating turbines. So then, companies can queue to test their own technology one after the other.
Bas, I would like to go one step back, one question back with you again, where we were talking about basically startups versus corporate for development of CCUS. So can you comment on that? And then we go back to the question that Antoine just answered.
Yeah, sort of, I would almost not see them as completely different. So we very much come from it from the corporate perspective, which is the primary sort of clients that a company like BCG has. And sort of when we talk to our corporate clients, where we're trying to shift the mindset is see carbon capture really as a business opportunity, not just as a cost, right? And that doesn't necessarily come from the perspective of, so therefore it has to be utilization, because otherwise it's just disposing of waste. But I would always argue waste disposal can be a very profitable business, depending on the regulatory environment. I mean, some of the biggest companies in the world are waste disposal and waste management companies, both in Europe and in the US. So I think when we talk to companies, it's see it as a business, right? Don't just see it as a problem. And then it really becomes a fact of what are the important questions that you have to ask yourself? And one of those is what is your technology strategy, right? What types of startups do you want to invest in? What type of portfolio of utilization and sort of capture technologies do you want? What breakthroughs are you wanting to bet on? That's very much the space of where venture capital and sort of the corporates intersect. I think the second, and we didn't talk about this a lot, is how do you actually pick the right locations? I think that's in the case of carbon capture actually pretty critical, which is not just looking for the right regulatory environment, but also where do I in the near term have storage opportunities. I think location matters a lot in terms of economics for carbon capture networks. And then lastly, really, what is the right deployment model? And again, this is something where we see, and I think Antoine was sort of alluding to it, the Norwegian government is actually doing quite a good job of orchestrating an entire ecosystem where research comes together, where sort of the EPC industry comes together, where local champions are created, sort of look at what sort of a company like Acre Solutions is doing with spinning out some of their technologies into standalone companies, and sort of really creating that ecosystem and end-to-end value chain. Given that the carbon capture and storage and carbon capture and utilization value chain always will require different parties to work together.
Thank you, Bas. Thank you. I have a question again here from the audience, and I think, Bas, maybe you can take it. Hypothetically speaking, what happens to the carbon credit earned in case of a leakage from a permanent storage site? Bas?
It's the same as what happens to your carbon credit when the forest burns down that you sort of that you invested in, right? It's not different, right? I think read the small print of the contract that you signed. We as a company buy offset credits of different natures, both engineered solutions as well as nature-based solutions. And there, I mean, it depends on sort of the quality and the specifics of the contract that you sign, in terms of who has that. It comes back to who has that long-term liability. in the case of like, if you would go to the Climeworks website, I'm sure there are terms and conditions about sort of what assurances Climeworks gives you in terms of like what happens to the carbon that is ultimately sequestered. But yeah, if there is a leakage, that's sort of there is a liability to that.
Thank you, Bas. I hope we answered your question, Mugil. This brings me to really to the end part of this webinar, and I would rather ask this one question again, which we have already touched upon. How does an involvement by corporates basically help CCUS or CCS? And this is to both of you, because Bas, you have been working with a lot of corporate clients, and Antoine, you represent the venture arm of Total. Let's start with you, Bas, and then we move over to you, Antoine.
I think playing a number of roles, like first and foremost, an investor, right? And sort of investing in specific projects. And it really depends what type of corporate you are, right? Where you invest in the ecosystem, whether it's investing in a blue hydrogen project or investing in a sequestration project. I think being an investor and sort of ultimately private companies can bring these projects off the ground. So I think that's the first responsibility. I think the second one, and Antoine was alluding to this, and I think this is where even corporates like BCG, but many play a role, which is like you can create voluntary markets. And I think we're seeing massive amounts of interest in like, we're not going to wait for mandatory carbon markets. In some cases, we're just going to create voluntary ones. And I think many corporates can play a role in just, please look beyond just nature-based solutions, right? Look at what type of other types of credits you can source. Or even sort of help orchestrate larger buying consortiums to allow others to invest in projects that they would normally find too risky, but that sort of larger corporates, whether it's professional services firms or airlines, etc., can be anchor tenants to these projects that sort of can buy carbon credits. That would be my. I've taken up my 2 minutes. I want to make sure Antoine gets the other 2.
Antoine, please.
Yeah, I will just add, as big corporates create some demand for CO2, like this is really key. Even if there is a mandatory market with a price on carbon which is fluctuating, it doesn't give a lot of visibility, but a long-term purchase agreement of carbon credit, that's really the best for a startup. And then I would say in the big industrial companies should work with startup, trust them. Capital is not an issue these days when the market is big and the opportunity potentially very big, like for CCS. So don't be shy. Work with startups, and then invest as well. Co-invest with us.
If you are hearing this, guys, this is the opportunity. Contact Antoine. He's on LinkedIn as well. One thing before we go off the webinar, CCS versus CCUS, and which is more risk free, or where there is less risk?
But sort of sequester now, utilize in the future. But sort of given the timeline for utilization technologies to mature, and sort of Antoine gave the example of Solidia. I mean, it's taken over 10 years to develop the technology, so we do need investment in utilization technology now for it to be there in a decade. But right now, I would say sequester as much as possible.
Thank you, Bas. Antoine, do you want to add to it?
I think do both. Why choose one?
I would take the investor's word for it too. Okay. Thank you, everybody, for joining us today. If you are here and if you want to know more about corporate news and the corporate community of Hello Tomorrow, we have put a link in the comment section for joining the core for corporate leaders. Please subscribe to it, and you will get monthly news from corporates. Thank you, Bas. Thank you, Antoine, for joining us today. Thank you.
Thank you very much.
Thank you.